a very quick introduction about myself. So my name is Eric. By qualification, I'm a chartered accountant. A little bit about myself, what I did in the past is that after Pricewaterhouse, I actually joined a government VC fund in Singapore. So I was there for some time and went through hundreds of startups, managed about 30 of them and 30 plus of them. One of them actually, I left about 12 years ago. One of them became a unicorn 2 years ago, right? At the moment right now, what I'm doing is that I have an accounting firm. This is ACE Advisory. So I'll be presenting some of the information you need to know about navigating the Singapore's regulatory requirement when you want to set up in Singapore. At the same time, I also have a consulting firm. So I'm a certified management consultant by Enterprise Singapore, which is a government agency in Singapore, right? And on the side, I really love interacting with startups. I am also a lecturer and a mentor at the universities and other incubators for startups in terms of entrepreneurship and venture building in Singapore, right? Okay. So ACE Advisory basically is an accounting firm. So very simply put, we offer like Corp Secs services, accounting, tax, but we do not do audit. So in Singapore, audit firms cannot be doing audit services. For audit, we normally refer to our friends. Okay. So the main partners in advisory is myself and also my partner Melvin, who is also an accountant from the Big Four. Okay, and they have over 35 years of experience in accounting. Okay, so this is the slide I actually used at the Nanyang Technological University about a month ago when I gave a presentation there. So a lot of them have not started. I'm sure some of you have already started. You did your validation of your market, and perhaps most of you probably already have a product, all right? And right now you are trying to explore expanding out of Korea and looking at coming to perhaps Singapore as a possible springboard, maybe to Southeast Asia. So in Singapore, if you were to start a business here, there is actually a few options. So of course, this is probably quite similar to Korea. We have sole prop partnership, limited liability partnership, and a company, which is a INC or a private limited, we call it in Singapore. Okay. For sole prop all the way to a limited partnership, normally what you will need to be a Singaporean or a permanent resident to set this up. Anyway, it makes more sense to set up a private limited, which is a company. So that is what we are going to focus on here. The reason for this is, number one, your liabilities are separated. The company's liabilities are separated from your personal liabilities. Also, there is actually a lot of tax incentives in Singapore that is only available to companies. If we register a business as a sole prop or partnership, end of the day, when you pay tax, we are paying personal tax. So we cannot tap into the tax incentive government put aside just for private limiteds, which are companies. Okay, so next we're going to move on to the requirement of incorporating a private limited in Singapore. What are the requirements? Number one, we need at least one shareholder. A shareholder can be an individual or it can also be a company. So for some of you that already have a company in Korea, you can put that company as a shareholder of the company you're going to set up in Singapore, and the company here, it becomes a subsidiary. Also, the one shareholder can be 100% owned. In some countries, they need local shareholders, but in Singapore, we don't require that. So it can be 100% foreign shareholder, either individual or corporate. Now, some of the requirement here is that for companies, you will need at least one local resident as a director. This is where sometimes it gets confusing for foreigners setting up companies here. Local, everybody thinks that, a lot of people think that it's a Singaporean or a PR. Not necessary. So I put a note here. It can also be somebody here on a long-term pass, like an employment pass or an entrepreneurship pass. So an entrepreneur pass is something like a business visa, provided, of course, that person registered as a pass holder and also acting as a director will be staying in Singapore predominantly. Okay, you need a local address. That is something that is very easy. Minimum payout capital is $1. Having said that, we normally don't recommend you to put $1. The reason being that if you were to put $1, you will have a very difficult time opening a bank account later on. In recent years, there are a lot of cases that happened in Singapore. About 2 years ago, there was this $3 billion, which some China scam organization moved to Singapore. So $1 payout capital company may give the bank an impression that this is a shell company and they do not know the intent and purpose. They may reject your request to open a bank account with them. Okay. Lastly, the company will need a local resident as the company secretary. So number one, this must be a natural person, meaning a person, an individual. Number two, if you only have one director, it cannot be the same person as a director. If you have more than one, it can be the same person. More importantly, number three, the person that is named as the company secretary must be professionally qualified. So either like an accountant like myself, or a lawyer, or a chartered secretary. Okay. All right. So if I were to just summarize this, these are a couple of things to just take note from a summary of what I said previously. If you're going to set up a fully foreign-owned company, right, you need to have at least one shareholder, at least one local resident as a director. Okay, if you really don't have anyone, you can engage us or another firm to be a nominee local director. And also, it's also possible if, let's say, one of the founder or somebody from the company is going to move to Singapore to work here in the company, can also be self-employed and act as a local director under the employment pass. Okay, so that's the basic requirement to set up a company amongst other things. So now in Singapore, I would just like to share what governs a company. So firstly, of course, we have the Companies Act. This is the law that regulates all the companies in Singapore. Okay, and companies in Singapore will have a constitution. In the past, formerly known as memorandum and articles, or we can also understand it as the bylaw of the company. This is a set of legal document that have the bylaws of how the company is governed and its business activity, its relationship with shareholders and whatnot. Okay. And then if we go down another layer, there is also shareholders agreement. Typically, I would say that if a very normal mom and pop business, like maybe somebody wants to set up a cafe and one person owns all the share, I guess it's fine not to have shareholders agreement. Typically, shareholders agreement is applicable more for high-tech startup, highly scalable startup, especially if they are going to be raising funds from investors. So among the clients that I have, those that comes from the university, which consists mostly of high-tech startup, and they have plans to fundraise. They also have multiple co-founders. That's where a shareholders agreement is important because it's an additional agreement to describe how the company should operate and also the rights of the shareholders. Like for example, clawback, rights of first refusal and whatnot. Just to touch and go on this, it's a totally different topic that we will need an hour to deep dive into. Okay. Right. So if I were to put this into a diagram, okay, a company and a person, the shareholders are actually separate legal people, like legal persons. So the assets and liability are actually separated. Okay. And how a company works is that basically, well, the board of directors reports to the shareholders, and of course, the management team reports to the board of directors. So in a graphical form, this is roughly how it looks like. Just to share a little bit about the rights to shareholders in a Singapore company. As I mentioned earlier that in Singapore, companies are governed under the Companies Act. So these are just like 9 points I pull out. There is typically something that I want to highlight to my audience, but there's actually a lot more things. Okay. So of course, shareholders have the rights to vote. In other words, to make decisions at a members meeting or a shareholders meeting. Okay. Shareholders normally have the rights to dividend unless otherwise stated in a shareholders agreement or in the constitution. So there are possibility whereby shares are not entitled to dividends if it's legally ironed out. Okay. The right to protect personal asset from the company's liability, that's why I showed earlier, is actually separated. Okay, right not to be treated oppressively. So in Singapore, there is a oppression of minority shareholders clause in the Companies Act, which will protect minority shareholders if they are being oppressed. Okay, shareholders also have rights to company information, basic stuff like financial statements, right? They have the right to call and attend any company meetings. Definitely have the rights to attend company meetings. If you hold more than 5% shares in the company, you have the right to call for a shareholders meeting as well. Okay. They also have the right to make sure that the company is compliant with all the regulations. They have the rights to preemptive rights to purchase new shares at the same terms and condition if the company is to issue new shares to investors or whoever. This is kind of a anti-dilution protection for shareholders in Singapore not to be unreasonably diluted. Okay. And of course, if the company cannot carry on, it strike off or you wind up or liquidate, the shareholders have the right to the residual assets after paying off all creditors. Okay. So I want to touch a little bit about directors. So I will say that probably is quite similar to Korea. Okay. So directors basically are the people in a company that has the rights to execute or exercise power on behalf of the company. Shareholders can't go to a bank to say that, hey, I want to open a bank account for my company. Directors are the one to do that. But for directors to do that, they of course need to get permission or inform the shareholders about this. So in Singapore, directors actually have a lot of power in terms of decision making, signing contracts, opening bank account and whatnot for the company. Okay. And of course, with all this power, the directors do have a responsibility. So these are some of the duties that directors have. These are the basic ones. There's a lot more. Just to touch on some of those that may be of concern to everyone here. They have the duty to actually hold meetings, especially the AGM, annual general meeting. Okay. They have the responsibility to make sure that the company appoints a company secretary that is a qualified person. If the company is to be audited, they have to appoint a auditor for the company. Okay. Any payment of dividends or profits is also something that the directors execute or exercise on behalf of the shareholders. They also have the duty and the rights to issue shares in the company, of course, with proper approval from the shareholders. And lastly, which I'm going to touch on a little bit more later, their duty includes making sure that the company does all its annual returns, filing, and a tax return on a timely basis. Okay. Now, directors, now and then we see in the news that directors are being brought to court by the government or the regulators or whoever. One of the case that's ongoing in Singapore right now is actually High Flux. It's I would say one of the biggest it is the biggest water treatment company in Singapore, locally started, and it got a lot of support from the government. But they ran into some troubles a few years ago, and the directors are being brought to court right now because they did not disclose and did not act diligently to shareholders. Okay, so directors can be brought to court if they do not fulfill their duties properly. All right, they may be guilty either under company law, which is more like a civil law, or they can be guilty under statutory law, which can potentially be a criminal law, right? So what directors need to do is that, right, this is a breach of duty if they fail to act honestly and use reasonable due diligence at all times to discharge their duties of office. Okay. Make improper use of any information acquired by virtue of its position. So a simple example is like insider trading. They did not sufficiently disclose any conflict of interest. If they were to accept bribery or corruption, well, this will definitely be criminal in nature. And of course, insolvent trading. That means they enter into contracts without reasonable grounds to believe that the company can carry on and leads to massive debt in the company. So these are just some of the common things that we now often see in the press. Okay. All right. And I just want to share that, I mean, there is different type of directors. This is something that was requested by the university to put in to explain. So I'll just share this with everyone. So actually all directors are directors. They're all covered under the Companies Act. Okay, so these are different kind of description of what kind of directors they are. Number one, an executive director basically is a director that is involved in the management of the company. Typically, there are C-suite. So a CEO is a director, then that person is an executive director. They have executive power on top of being a director. Non-executive director basically just the opposite. Basically, is a director that is not involved in the management of the company. Okay, a nominee director is nominated. Basically, it can be nominated by the company. Sometimes, if you are raising funds from a VC or investors, the VCs can also nominate a director to sit on the board. Normally, the nominee director, the main objective is to provide an oversight of the company at the board level. And of course, there is an independent director. This is a director that is not involved or not related to any shareholder or the company in any way. It's to provide an independent oversight of the company. It is a requirement for listed company in Singapore. For non-listed company, a normal private limited, it is not a requirement, but it's a recommendation. If you are going to be raising funds from VC, this is something that investors or venture funds will normally ask for as well, whereby the founders and the investor will together seek and appoint an independent director to provide an independent oversight of the company for the purpose of corporate governance. Okay. So with this, we talk about how to set up a company in Singapore, the requirement, and some of the things that is in the company like directorship. So for here, we are going to talk about what you need to do after you have set up a company. Okay. These are the requirement, or rather the basic filing requirement by kicc. kicc is basically the registrar of companies in Singapore. Okay, so these are the statutory requirements under the Companies Act that we need to be wary of. It must be done on an annual basis. So Section 201, directors must present up-to-date financial statements at the annual general meetings. Okay. Up-to-date, the definition is at the date of the AGM, the financial statements presented must not be more than 6 months old. So it must be within 6 months of the year end. Section 197, it says that the annual filing must be filed through the kicc, or rather the registry of a company's web portal. Okay, so it must be done within 1 month of the AGM. So if you have your AGM today is today, what's the date today? Yeah, today is the 19th of August. If we have an AGM today, you have to file it by the 18th of September. Okay. And also when we talk about the financial statements, all companies must comply, or rather their accounts must be prepared in accordance to the Singapore financial reporting standards. So we have one for small companies. Okay, there is a full one, but the government is giving leeways to smaller companies so that it's not as strict, and there's not the disclosure notes to the financial statement is not as massive. The qualifying criteria is that it is not a public company. It has less than 50 employees, or 50 or less employees. It has 10 million or less of assets, and it has 10 million or less in terms of revenue. So as long as the company qualify for all these criteria, it can use the SFRS for small companies instead of the full one. Another thing to note here is all companies in Singapore, other than filing the AGM, for the financial statements, it must do a special XBRL filing. This is something that is required of all companies. However, there are exceptions. So normally how the Singapore law works is that everybody must do it, but then they give exception instead of saying group A and group B. Okay. So in this case, what are the exception? First exception is companies that are regulated under the Monetary Authority of Singapore. They only need to do a partial XBRL. This is a special filing. It's a markup Excel program that the regulators came out with, and we have to fill it out to do a filing on a special portal. So companies are regulated by MAS. Example, your VCs, fund managers, they are regulated by MAS. So they only need to do partial XBRL. Okay. If instead of setting up a subsidiary, you're setting up a branch office in Singapore, you're exempted from this. And of course, thirdly, solvent exempt private companies. So what are solvent exempt private companies? Number one, solvent means that the company is in a good financial health. It is liquid. Okay, it is solvent. And exempt private companies basically means that you do not have more than 20 individual shareholders, and you do not have a corporate shareholder. In other words, I mentioned earlier that when you set up a company, it can be individuals or corporates. If you decide to, let's say your company has 2 shareholders, you decide to set up a company in Singapore with 2 individuals as the shareholders, you are technically exempt private companies. But if the structure is such that you decided that it's going to be a subsidiary of a Korean company, then you have a corporate shareholder. In other words, you are no longer exempt private company. You will have to file XBRL on an annual basis when you do your annual returns. So of course, a lot of people say that Singapore is a fine company. We have a lot of fine for everything. So our penalties for not being compliant in this, the basic ones is basically for each of the section I shared earlier, is a $300 fine for each year that you do not do this. Okay, and when people search for your company on Across directory, there will be a red cross beside your company's name instead of a green tick. This means that it is not in compliance in terms of its filing obligations. Okay. And if this is repeated for 2 years or more, there's also penalties on the directors. I mentioned earlier, one of the directors' responsibility is to make sure timely filing of annual returns and tax returns. So if this is not done, the regulators do not go after the shareholders, they go after the directors. Potentially, the directors may be prosecuted in court with a fine, a debarment from being a director for any other company, or even worst case, a disqualification from directorship. And they'll be forced to attend a director's compliance course. Okay, I have not been, but I have friends and clients who have been. It's basically a 2-day course that is a very much a waste of time, and it costs $200. So as much as possible, let's try to file everything on time. Okay, the other possibility is that sometimes when we are busy running our business, our startup, there's a lot of things that we have to handle. Our financial statements are just not prepared on time. We can't do it within 6 months. So what do we do is that, right, you can actually file for extension. You pay $200, you can extend this for 30 or 60 days, subjected to the regulator's approval. But you still need to file it within 30 to 60 days. The good thing about this is that when you file within the extension, it will still be a green tick beside your name, and you do not have to pay the $300 fine. Another situation whereby all these are not, the fines are not applicable is if the company has already applied to be struck off. Struck off is only available if you have cleared all your liability. In other words, you can zeroize your balance sheet. So if the company decide to shut down its operations in Singapore and there are no creditors, either suppliers or government or your employees, you have cleared everything and the balance sheet can be zeroized, you can apply for a strike-off. When you apply for a strike-off, if you have outstanding annual returns that is not filed for 1 year, 2 years, whatever it is, the government, it's about 10 years ago that they changed this. They allow you to do so without paying any fine. They will waive everything and allow your companies to be struck off. In the past, you have to settle your fine before you strike off. But the government realized that if the company is not going to be do not have money to carry on and is going to be struck off, normally people will not have money to pay the fine, or shareholders are unwilling to come up with additional money. And end up, we have a lot of living dead companies on ACRA. So they decided to give a waiver. Okay. Now, technically, all companies in Singapore are supposed to be audited, but here's the exemption. Your company can be exempted from audit if you meet the criteria of the definition of a small company. So number one, of course, it must be a private company. Number two, you need to meet at least two of the three following criteria for the immediate two past consecutive year, including the one you are filing. So number one, first criteria, the revenue must not be more than 10 million. The asset must not be more than 10 million. And the number of employees must not be more than 50. So it's the same. You just have to meet two of these criteria to be exempted from audit. Right? It doesn't matter whether your company has an individual shareholder or corporate shareholder. But having said that, I need to say one thing is that I need to highlight something is that if your company has a corporate shareholder and the corporate shareholder is, let's say, a Korean company or what, even a company in Singapore with a subsidiary, these criteria are evaluated not at the company in Singapore. These criteria should be evaluated at the group level. In other words, they will need proof that the total assets in the entire group, the subsidiary, including the parent company in Korea, is not more than 10 million and the total employees are not more than 50 or the assets are not more than 10 million. Okay, so just to share, if it's a subsidiary, criteria are actually applied at the group level and not at the company level. So these are the basic filing requirement with the Registrar of Singapore. Now we want to talk about tax filing. So in Singapore, taxes are regulated by IRAS. This is our Inland Revenue Authority of Singapore. Okay, so when we do business, we are the objective of all businesses is try to turn a profit. And when we set up a company in any country, the objective of the government is to tax you. Okay. In order to tax you, you have to file your taxes. So what do we have to do? In Singapore, you have to do it twice. The first one is just an estimated. Within 3 months of a financial year end, companies in Singapore have to file an estimated chargeable income, which is the estimated net profit. However, you can be exempted from filing this if, number one, your annual revenue is less than 5 million and your estimated ECI or net profit for the year is 0. Typically, it means that the company is not profitable. Okay. This is at the company level. After that, the actual tax filing is to be filed on the same day, by the same day for all companies in Singapore, which is the 30th of November of the following year of your financial year end. Meaning that if today is my financial year end, 19th of August, I do not have to file my actual tax by 30th of November this year. I just have to file my ECI within 3 months. I only have to file my actual tax 30th of November 2026. So it's always the next year that we file our taxes in Singapore. And after you have filed it, they give you a tax return, you have to pay out within a month. It doesn't matter when your year end is. If my year end is 31st of December 2025, I still do it next year, 30th of November. Assuming that my year end is 1st of January 2025, my actual tax filing is still 30th of November next year. Okay. Now, when we file taxes in Singapore, there is the full tax return, which require a lot of information. But the government also give a simplified version. So when we file our tax, right, basically it's called Form C, and they come out with a Form CS, which is Form C simplified. It is a condensed 3-page income tax return that smaller companies in Singapore can do. The criteria to file a simplified tax return is, number one, of course, incorporated in Singapore, but they put it on the website, so I pull it out. Okay, it's a common sense, right? Number two, the annual revenue is less than 5 million. The company only derive income taxable at the prevailing rate of 17%. One example is you do not have foreign source income. There are companies that do trading and they have foreign source income. Foreign source income are not taxable in Singapore. So if you have foreign source income, then you're not eligible for Form CS. You have to give the full tax return for them to access. All right. And you're not claiming any carry forward of tax losses or whatnot, or group relief, investment allowance, or any foreign tax credits. Okay. So in Singapore, if let's say you're making a loss this year, you don't pay tax. On top of that, you can carry the tax losses to next year to offset the profit that you make next year. Okay, you can do this as long as there's no significant perpetually, as long as there's no significant changes in the shareholding. In other words, you don't have more than 50% changes in your shareholders list. Okay, now I think this part is something that everybody is more interested. This is where normally when I talk about this, people's eyes will they'll pay more attention. As I mentioned earlier, Singapore government, they give a lot of tax incentive to companies. And there is special tax exemption or rather incentive for startups. I think the word tax incentive is more appropriate, but they call it exemption. So I'm going to just use the same word, tax exemption. Okay. After you have incorporated your company, for the first 3 consecutive years of assessment for income tax by your company, the first 100,000 of your profit is 75% exempted. The prevailing tax rate in Singapore is 17%. In other words, for the first 100,000, instead of paying 17%, you will be paying 4.25%. And there is a further exemption for the next 100,000 of 50%. Likewise, for the second 100,000 of profit that you are supposed to pay tax for, instead of paying 17%, you are paying 8.5%. Okay, so for the first 3 years, this is a 3 years promo by the Singapore Government Tax Authority for new startups in Singapore. It doesn't matter whether it's a startup started by a local Singaporean or by foreigners. All companies are eligible for this promotion or rather tax incentive. Okay. However, there is an exception. Sorry, 2 exceptions. First exception, it cannot be an investment holding company. In other words, a company with no operation other than holding investment or properties and stuff. Secondly, it cannot be a property developer or property investor. So in Singapore, developers often set up special purpose vehicles to hold the buildings that they are developing or development projects. So such companies are not eligible for this. Okay. Right. As far as it is still applicable, the government actually extend this to companies older than 3 years old. However, it is slightly less generous. So instead of 75% discount for the first 100K, they are only giving 75% discount for the first 10K. And then there's a 50% discount on the tax for the next 190,000. So the same thing is still the first 200,000. It's just that the mix is different. This is for companies that are more than 3 years old. Same exception, investment holding company, property developer, or property investors are not eligible for this. All right. Okay. On top of the tax exemption I shared earlier, the government also gives special income tax rebate subjected to the government's generosity. For 2025, the government is giving a 50% tax rebate. In other words, after I calculated my tax, assuming that I make 100,000 and I'm a new startup in Singapore, I will be paying tax at 4.25%. So I calculated, okay, so that's about $4,250, right? On top of that, the government will give me a 50% tax rebate. In other words, I only have to pay half of that for the year of assessment 2025. In other words, for the financial 2024. Because remember, I'm filing tax this year for last year's P&L. The government will give an additional 50% tax rebate. So I pay half of that 4.25%. I'm paying 2.25%. Okay. For the CIT rebate, it is not something that is there permanently. This is something that will only be announced by our Prime Minister every year during the budget in February. As you can see, there was 2013 all the way to 2020, and then suddenly there's nothing because 21, 22, 23, there was no CIT rebate announced, so there's nothing. Then 2024, last year, they announced it again, 40 up to 40,000. And then 2025, they announced it again. Okay, so this is something that is subjected to government's announcement during the budget. It is not something that will be there every year. I think this is a bit for us to listen to the budget because the PM budget can be quite boring. Okay, some of the headline tax in Singapore, just to share, is mentioned earlier, the basic income tax rate for corporates is 17%. Our GST, which is a VAT, the value added tax, is at 9%. A company in Singapore only had to register for VAT or GST only if your revenue in Singapore is more than $1 million. Meaning that I have clients that are doing trading, they do a lot of international trading. Their revenue is more than 10 million, but most of the revenues are foreign source. It's not in Singapore. Their Singapore revenue is less than 500,000. So they actually do not have to register for GST. It's a consumption tax. Only if your business, services, or product is actually consumed in Singapore, it's more than 1 million, then you have to register to be a GST. And then you have to go for a GST registration. And you collect GST from your customers. Okay. In Singapore, there's no dividend tax. We practice a one-tier tax system. All tax are paid at the company level. We have no capital gain tax. If you buy and sell a property in Singapore, you make money, you don't have to pay tax on that. Lastly, to share, in terms of personal income tax, in case any of you is going to move to Singapore under employment pass or entrepreneurship pass, you have to pay personal income tax because you are tax residents and you are making money in Singapore. Singapore personal income tax starts from 0, progressively up to 24%. So when do you pay 24%? Just give you a very rough feel of this is you have to make $1 million a year to pay 24%. Okay, the first 20,000 is 0. They'll give you a few tier is that the first 20,000 is 0, and then after that up to 40,000 it's 3.5. The next 40,000 is 7%, and then after that the next 40,000 all the way to 120 is at 11%. So it will progressively lead to 24% when you hit $1 million or so. Okay. To give a quick comparison with other countries, in terms of corporate tax, Singapore is actually at the advantage. It's the second lowest other than Hong Kong. However, because the Singapore government gives a lot of tax incentive, I would say the first couple of million of profit you make, Singapore tax is effectively still lower than Hong Kong. Even though Hong Kong is at 16.5 and Singapore is at 17% because of all the tax incentive I shared earlier. There are other tax incentives as well beyond that, okay? VAT, this is where we lose out to Hong Kong. We are 9%, Hong Kong is 0. Dividend tax, we are at 0. Capital gain tax, we are at 0. The ease, or rather the days of setting up a company, provided all the information is being published to your company secretary, service provider. The incorporation of a company actually takes 1 to 3 days. I say 1 to 3 days because sometimes it can take up to 3 days. But majority of the time when we incorporate companies for clients, if all the information are in place, actually it takes less than 1 hour after we have submitted the application to the government. All right. Hong Kong is pretty fast as well. Malaysia is reasonable. The rest of the country, yeah, it can take very long. And some of these countries, let me share, I've experienced setting up companies in these places for some of my clients. This is just an estimation. It takes a lot longer than that. Right, the Philippines, they say 60 to 90 days. The last time I tried to do something for my client is because the information they require is there's a ridiculously long list of information they require. And you need to bring it down to the embassy to get it stamped and everything. In the end, it took 5 months to set up a company in Philippines for a client. The same thing for China. It took 5 to 6 months because of all the documents that need to be verified through copy by the embassy. And then the embassy chops them and then send to China. Yep. Okay, I'm coming to the end of the of the presentation. These are the basics that you should know. I have some bonus slides in terms of other incentives the government are giving. Okay. If your company is in deep tech, I'm sure you have some R&D. You can choose to do it in Korea or Singapore. Well, the thing is, if it's parked under the Singapore company, there are additional R&D tax deduction up to 400%. It starts from 150 for qualifying R&D activities. So for this, the three requirement that needs to be met is that it must be a new or improved product or process. Okay, it has to involve novelty or technical risk. For those of you that has a patent or IP, the definition of novelty is pretty similar to when you want to define novelty for patent filing, all right? It involves systematic, investigative, and experimental studies. So if you want to get additional tax deduction for R&D efforts in your Singapore company, make sure that the R&D process is documented. I have clients that successfully get a deduction, and the tax authority sometimes they will come back after a couple of years to say that, okay, regards to this deduction that you filed for and stuff, you know what, we need to get supporting document. At the point of tax filing, you do not have to provide any of this, but you have to keep a record of them because the tax authority can come back to us for this within 5 years. We are required to keep all our documents for 5 years. After 5 years, you can destroy it. And if the tax authority come after 5 years, it's like, well, it's more than 5 years. We have discarded all the information. I don't have it. It's fine. Also, in Singapore, Singapore is very small. I mean, compared to Korea, I mean, it's just an island. If I'm not wrong, it's smaller than Jeju Island. All right. The government is trying to encourage companies here to also go overseas. If you are intending to use Singapore as a springboard to Southeast Asia countries, it is actually a good decision. The government gives additional tax deduction for internationalization. So for expenses like overseas development, investment, study trips, overseas advertising, promotion campaigns, certification like ISO or whatever for overseas market, trade fairs. If you spend any of this stuff, including the air tickets and accommodation and all, the government allows a 200% tax deduction for the first 150,000 per year when you expand out of Singapore through the Singapore company. Okay. 150,000 is the norm. It is up to first 150,000. However, I have also seen companies that spend a lot more, and provided their P&L is very strong, they can get additional support. They can write in appeal to Enterprise Singapore, which is a government agency taking care of SMEs in Singapore, to get additional 200% tax deduction for more than 150,000 of eligible expenses per year. Okay, these are just some of the overview of things in Singapore. There are still a lot of initiative as well, you know, even when you're hiring staff and all, you have hiring grants. Okay, there are actually more than 100 grants and whatnot in Singapore. However, 80% of those programs require a 30% local shareholding. So if you have a local partner that hold 30% or you have investors in Singapore, there's actually a lot of grants available. Even if you don't have that, you're 100% owned, foreign owned, it is fine. There's still about maybe 15-20% of the grants that are applicable. For example, if you're going to hire in Singapore, there are actually hiring grants, as long as you're hiring a Singaporean or PR. Right. This is another in-depth topic that, of course, if you're interested, can approach me, we can discuss. All right. So yeah, this is the end of my presentation. This is really a very preliminary sharing. I didn't want to go too deep. I am afraid that if I go too deep, I may bore everybody and you will fall asleep, because this is a very boring topic, right? Yeah. So this is a QR code. If you are interested to find out more or discuss or to set up in Singapore, you can scan this QR code and my contact details are there. You can contact me for more information. All right. So with this, can I open up? I can open this up to questions. Does anyone have any questions for me? Please ask. Whatever question you ask will benefit your fellow audience, because this is something that they may have thought of. Yep.
Does anyone have any questions? This is the time to ask Eric. Mm,
There is nobody asking. I would like to ask a few questions.
I
Thank you, Eric. For your presentation. It was a nice presentation that I could understand more about this financial frames basically in Singapore. So I'm not from startup. I'm from nipa.kr, who owns this program basically. But generally, when I see these startups when they're coming in, there are two pathways that they choose. One is they have their subsidiary in Singapore and then have their HQ in Korea. And then the other way is they basically they flip. So they open their HQ in Singapore. So if they choose these two pathways, right? Is there like when they open their offices in here? Because like at the beginning of your presentation, you were giving the general process of how to open the business in here. But then like if you can, I'm not sure if the time is enough. But then if you can divide into these two ways and give us a brief process of how to do this.
okay. I don't think I can touch on everything because this decision in has a lot of variables. There
Mm,
are a lot of other things that we have to consider in terms of the international tax. All right,
right.
a double taxation treaty between Singapore and Korea, and also the filing requirement for Korea, which I will not be familiar with. The immediate benefits I can see from Singapore's perspective, if you were to set up a holding company in Singapore instead, is that, well, one of the things I mentioned is that, you have to do you do not have to do an XBRL filing because you will be, assuming you don't have investors, it will be individually held. So you have individual shareholders. However, assuming that everyone here is trying to build a highly scalable tech company, you are going to be raising funds. That's not going to be a benefit that will be there forever because once you get funds from VCs, they are corporate investors. Okay. Other things I will consider here is in terms of where your market is. If your market is very much in Korea, that may not be something that you want to do. But however, if your plans and your market is more in Southeast Asia, and also where are your investors in? If you're going to raise funds more from investors who are based in Singapore, it does make sense for you to actually flip it around. And to flip it around, this is a whole new topic in terms of corporate finance and corporate restructuring. So I have done many cases of such flips for clients and startups as well, because you have to go into a share swap agreement and you have to do basically I had to work with an accountant from Korea or any other countries to do the share swap. Okay. These are just some of the things I can touch on and for you to consider. Cannot give a very straightforward answer of which is better. Korea have its own advantage and Singapore has its own advantage. It very much depends on your business, your market, and where you're going to raise funds from. Yeah, everything else aside. Yeah.
So for the flipping, right? When they set up their own business, not the subsidiary, is it the same process that you have to have like a one shareholder and one director and uh, one employee? Is it?
Okay. Yes, it is the same process. So when they set up, with whether you're setting up as an individual or corporate, right, it's the same requirement. The only main difference is that if it's a subsidiary, you have to do XBRL filing, whereby if it's individual shareholders, for the time being, you don't have to do an XBRL filing. Yep. Not a local employee, but rather, yeah, they need a local resident director.
Yeah. Okay. All right. Thank you.
Welcome.